Well, a weak ADP report this morning is causing some worry ahead of Friday's big jobs report. As we continue to see weak data, will the Fed call timeout on its tapering? Well, that's what our next guest is saying. He's also suggesting that even if we are heading back into a recession, the Fed should step back and just let it happen. Joining me now is Peter Schiff, Euro-Pacific Capital CEO, always interesting and controversial. And, by the way, author with his brother who got first billing of this wonderful book.
Oh, he doesn't have top billing. Take a look again. He's below me.
He claimed that the letters were bigger in his name.
Yeah, they're bigger.
How an economy grows and why it crashes. All right, first of all, if Friday's jobs number is weak, you say the Fed will do what?
Well, I don't think they're going to do anything on Friday. They're going to keep blaming all the weak data on the weather. I think the weather is the best thing that the government's got going for it, because they
will stop and reverse their tapering, is what you're suggesting.
They will eventually. Not only are they going to stop it, yes, they're going to reverse it and do more QE, because the whole fantasy of a recovery is going to fall apart. I mean, right now people are in denial because they're blaming everything on the weather. That's the excuse. But if you
let's, by the way, quote Janet Yellen on the weather, if we can. She said a number of data releases have pointed to softer spending than analysts had expected. That may reflect in part adverse weather conditions, but at this point it is difficult to discern exactly how much.
It's not the weather. They're blaming lower internet sales on the weather. You know, they blame the bad car sales for GM and Chrysler on the weather, yet Mercedes, BMW, and Maserati had record sales. So what? It's the rich guys that are buying the Maseratis. They can make it out in the snow, but you know, Johnny Sixpack, who's buying a pickup truck from Chevrolet, he's too much of a wimp to go out in the cold weather.
So if it's not the weather, what is it?
It's the economy. The economy is weak. You know, the Fed's stimulus is wearing off. That's why they're going to come back with a bigger dose.
But hold on a second, in what way is the economy weak? I just talked to our analysts about how so many of the corporate balance sheets are strong. They have very little debt. They have pared down their personnel to bare bones. In what way is the economy weak?
Well, first of all, they don't have very little debt. They have a lot of debt. They have a lot of cash, but a lot of that cash was borrowed. It wasn't earned. But they didn't earn this money or borrow this money because of a vibrant economy. It's because the money is so cheap. The Fed is giving it out. So the stock market is going up, but the real economy, we're not producing more.
Hold on a second. You are saying that companies are borrowing cash just to hoard cash?
They're borrowing it because rates are low. They're issuing long-term debt. A lot of the cash, though, they're using to buy back their own shares. So they have to borrow it first before they can use it for the share buybacks. But a lot of companies want to borrow the money while it's cheap because they know eventually rates will go up and they won't be able to borrow it.
Okay, the Fed's chair, again, Janet Yellen, saying about whether or not they're going to continue with their tapering. We expect to continue reducing the pace of purchases in measured steps, which would mean ending completely the purchases, winding down, and ending sometime next fall. You say no way.
That's just posturing. The Fed can't come out and admit that we have a phony recovery that will collapse the minute they take away the supports. So she has to pretend that it's legitimate, but she's waiting for the proper excuse when she can come up and say, oh, you know, something happened that we didn't expect. We couldn't have anticipated this. And as a result of that, we have to slow down or taper the taper. And eventually they're going to come up with even a larger dose of QE. The Fed is ultimately going to be buying more than $100 billion a month. Not because it's going to work. It's not going to work. It's the Fed that has created this problem. The reason we don't have a real recovery is because of the Fed.
All right. Do you think we are going into a recession? And if so, is there anything the Fed can do about it?
No, and I think we've been in a recession the entire time. I think the recovery is an illusion. They keep talking about a jobless recovery. That's because it's not a recovery. That's why it's jobless. I think the only reason it looks like it's a recovery is because the numbers aren't right. I think the inflation numbers are too low, so it looks like growth, but really what's happening is we're creating inflation, and we're spending borrowed money, and we're counting the spending of that money in the GDP, but we're ignoring all the debt that we're accumulating to finance the phony recovery.
I couldn't speak to Peter Schiff without mentioning gold. Your Euro-Pacific Gold Fund is up more than 25% this year. Congrats, but it's still not enough to wipe out the losses from 2013.
Well, not for my fund because we started late in the year. But yes, if you bought gold early in 2013 or gold stocks, you haven't made up your losses yet.
That's gold. But, by the way, you'd see a V shape if you were looking at the Pacific Fund.
Yeah, but you know, the gold's been going up for 13 years. We had one down year, and everybody in the financial media acts like, well, this is it. Gold is never going to go up again. It's a disaster.
So quickly, you buying?
I'm buying. I think everybody should be buying. We're going a lot higher.
How an Economy Grows and Why It Crashes. That is the book by Peter Schiff and his brother. It's available right now.
Yeah.